Welcome back for my final daily report market analysis video with me, Richard Perry, market analyst at Hantec Markets on Monday, the 24th of August. Looking at this gold chart, let's try and get a little bit of perspective on how gold has been moving. Okay, taking a step back, since early part of August, we've had three big sessions to the downside. That's it, really. But in that time, obviously, we've seen a 10% correction, and again another sharp correction on Wednesday last week. Essentially, gold, I think, is still a bull chart. I think you've still got the uptrend that plays out here over the past coming up 3 months now, 2.5, 3 months. And I think that is still suggesting that gold is a buy into weakness. And you've got these momentum indicators that have unwound, but they've unwound into positions at which historically you tend to really see the buying interest coming back in. Those stochastics are stabilising sort of between that 35-40 area. You've got the RSI stabilising around that 50 mark. MACD lines are still sliding, but essentially just unwinding back to a decent buying area, I think. And that is the way that I'm looking at gold at the moment. This is all playing out as though the market is sort of readying for the next move higher. It looked as though it was gaining that move last week, and then it had that sharp US dollar rally, little short covering rally that we saw on the dollar, which dragged gold lower. Big sharp bear candle that was, well, sort of $70 of downside move on Wednesday last week. Big strong move to the downside, but the market has stabilised since then around that 23.6% fib mark, interestingly enough. And again, above the uptrend, which comes in sort of there or thereabouts above around $1,900 in the next day or so. So this is just an unwind, I think, back into support that is likely to now start to build and then push higher again. The question is when that move really does start to take hold and decisively maintain that move, because you've got the volatility that you're likely to see on Jerome Powell, the Fed chair speech on Thursday. So that needs to be kept an eye on. But at the moment today, we've started to see the market ticking back higher again. You can see here through the hourly chart, we're holding on to essentially support around that 1930 mark. Again, picked up off there this morning, sort of testing the 1955 initial resistance. Again, that's been a basis, isn't it, in the last sort of couple of weeks, really, but moreover on Thursday and Friday last week. But you look at the hourly momentum, RSI into the 60s, we've not seen that since, what was that, Tuesday last week. MACD started to tick up, stochastics looking decent. So the market is looking positive, and a close above 1955 would be a decent move higher, I think. Start to generate a little bit more upside momentum. We've already closed, or we're already moving above that little near-term corrective downtrend the last few days. So the market is beginning to gain a little bit more stability now. It could be that you don't see too much movement on gold in front of Jerome Powell, but just starting to look a little bit better. Above 1980, certainly you look more confident. You really do see that you need a move above 2015 really to generate that decisive upside momentum. But the bulls are beginning to look a little bit more confident again. And I still think any near-term weakness is likely to be seen as a chance to buy. It's just that when the market can really sort of break the shackles and really go again to the upside is the question. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website, sign up for our webinars, and also click to watch Trader Talks, our videos that give you top trading ideas.